Will the real estate market frenzy keep up through the second half of the year, or are buyers starting to get scared off by high prices? Triggers for some new inventory to come to market soon. So that's the data we are keeping our eyes on this year and in the next few weeks. And today, as we wrap up the summer buying season, each week, Altos Research tracks every home for sale in the country, all the pricing, all the changes in pricing, all the supply and demand, and we present those metrics here for you so that you can see them before it becomes available in the traditional media channels, the headlines. So it's now Monday, July 19th, 2021, and here's the data for the week. Let's start this week looking at the available inventory of unsold single-family homes in the U.S. Inventory climbed again this week to 390,000. That's up 4.75% from last week, which is low, of course, due to the July 4th holiday reporting, but it's a strong increase nonetheless. We likely have 2 more weeks of climbing inventory before the school year is upon us and the new listings start each week to ease off as we go into fall. Our inventory increase this year could be extended a couple of weeks into August, as the hot market is definitely drawing sellers cashing in on equity, and the time to sell is so fast that sellers are unafraid to list later in the summer. Transaction volume will likely, therefore, remain unseasonably high. So 2 weeks more of climbing inventory, maybe as many as 4 weeks more, with total available inventory of unsold homes on the market at any moment peaking at about 400,000 in a few weeks. Last year, this time, we were at 647,000 homes, but just declining every day. Last year, because of remote work and remote schools, people could much more easily buy in the middle of September or October. And so our inventory declines accelerated along with the low interest rates. So this year, unless and until we get mortgage rates climbing, then you can assume that buyer demand stays hot, inventory will shrink as usual at the end of the year, ending up at more like maybe only 230,000 homes, 230,000. So we have our normal seasonal pattern happening, but we're in a new normal of far, far fewer homes available. As we've been sharing this year, one of the most powerful measures of this buyer demand and whether it's holding up as the booming market gets kind of old, this is our immediate sales metric. So of the 109,000 single family homes that hit the market this week, 25,000 of them sold immediately. So if you're a buyer or you're watching your local market, you'll experience this in the form of bidding wars and like offer deadlines. The house gets listed today, we're taking offers Wednesday, and we're in contract before the weekend. You can still see this happening all over the US, even as we wrap up the summer buying season. 109,000 new listings this week is actually very strong, but it also shows us still that there are far more buyers than sellers. Home prices, unsurprisingly, are fixed this week at $399,000. We've been at this plateau for several weeks now. It's the median price of a single family home in the US. Again, this shows us that demand is still elevated at a time of year when it's not uncommon for demand to be weakening. In 2018 and 2019, you can see that by mid-July, median home prices have already started easing back a few percent from the spring peak. That's the dark red line here. Last year, prices stayed elevated much later, and that's why we ended the year with the double-digit price gains. We're on the same pattern this year, actually, as last year. So August, finally, we'll start seeing our median home price tick down a little bit week over week, but a couple more weeks at our plateau here. The price of the newly listed cohort, that's the dotted line on this chart, appears to be just starting to pull back now. Normally, this group peaks with a peak of the market precisely the last week of May. The price of the new listing leads the rest of the market as sellers and listing agents know exactly how strong the demand is, and they price accordingly when they bring a new house to market. They know, for example, that the house down the street had 20 offers, and so there are still 19 buyers trying to buy the next house. There's no reason yet to start cutting prices. So until those sellers see demand weakening, market time climbing, for example, immediate sales falling, that's when they know that they have to start pricing a little lower. This should happen in the next few weeks. So there are buyers, for example, who have been in the market all summer, but they're now looking at the start of the school year, and they will likely in August stop being in the buyer's market, and they'll put it off until next spring. And so that's why you have the normal yearly cycles in this data. The signal here to pay attention to in the dotted green line is that normally this starts to be visible in June, but is only now just starting to show up a full month later than normal. So no signs of any kind of buyer bidding fatigue, really, nothing really, at least not enough to be at all worrisome. And that, of course, brings us to year-over-year price changes. So how strong will 2021 finish? In this chart, we measure the difference in median price this week versus the same week a year ago. By mid-July last year, remember, we were still in shock about how strong the market was, how quickly prices were rising, how steep this curve was. As the pandemic hit last year in March, we started doing these videos each week because, frankly, we expected the market to crash. And we wanted to be able to know, and we wanted you to be able to know what was happening as it was happening. By July, there was a real turning point for market forecasting. So if you use a traditional approach for forecasting home price, probably use closed sales and maybe things like unemployment in your models. And so by July of last year, both of those things were really, really bad. So in July, you only see the sales that were happened in March, April, May. And that in the pandemic time, those were really low. So by July, the traditional forecasters were really still calling for a 5 to 10% decline in home prices this coming year. And this is when the Altos data really shines. So because we're watching the active market, we're watching not stuff that happened months ago. We can see right now where demand is and where prices will be in the future. So last year in July, prices were skyrocketing, and there's no way the market was going to be a down market. Even though there were millions that were newly unemployed. This year, we can see in this chart how the annual price changes have declined from their frenzy in March and April, and that we're going to finish the year in this 12% appreciation range. This also suggests that next spring is unlikely to be as crazy as this spring. So 2022 will be more likely to be in a 5 to 7% price gain range, unless, of course, interest rates make a big move one way or the other and change the affordability metric for all these buyers out there. Okay, for today, demand is staying strong later into the summer, later than most years. It's not as unseasonal as last year's, work and home, school from home craziness. In the next few weeks, we should see inventory peak and then the normal decline through the latter half of the year. If something unusual hits the market, you can be sure we're going to look at it here. We'll see it here first, and we'll report it here. Until then, see the data for your local market. Just go to altosresearch.com and run a report. For agents and brokers, make sure you request a demo so that you can get some time with someone from the Altos team to show you how you use the data to reach your clients and prospects and keep them informed when they need it.